What's going on, guys? Welcome to the video. I did want to quickly apologize. The next clip is a little bit out of focus. I had the lens on this camera set in manual mode when I went to actually record it, and I didn't realize it at the time. The information in the video is still really good, so I hope you get some value out of it. I will see you in the next one. Thank you. Welcome back to another video. Today we're gonna be, what do I have these in? Today we're going to be talking about the importance of creating a trade plan, how you can actually do it, some pointers you need to have in your trade plan, and I've actually included a template down in the description box below that you can utilize for your own trading. It's something that I've used time and time again. I still use it to this day. It's got basically every parameter you're going to want to have within a trade plan. If you're new to the channel, my name is Kyle, and this is Opinicus Holdings. Now, what is the purpose of a trade plan? The purpose of a trade plan is to allow us to follow a rules-based approach to trading. This is important because if you're not following rules with your trading, you're basically guessing, which is going to be more close to gambling than it is to trading. We don't want to be gambling when we approach the markets. We don't even want to have that as a mindset. Without a trade plan, it's very easy to allow emotion to get into your psyche, and this is going to mess up everything you're doing on the markets and really just cause you to lose money. Reason being is, let's say you enter a trade and you're in calls, long calls, you think the stock XYZ is gonna go up, it ends up dipping a little bit and you don't have a firm stop loss or firm idea of where you're gonna exit the trade. It may get down to a reasonable area where you should probably exit, maybe 10% loss or something like that, or some price level where it's not, if it loses this critical price level, it's likely not going to recover. Obviously there's a million different scenarios, but you're in this trade, you have no trade plan, it gets to this price level, and at this point you start thinking, oh, maybe it'll recover. Oh, if it just bounces a little bit, then I'll get out. Oh, and the list just goes on and on and on and on. These are your emotions playing with your psyche and really ultimately causing you to lose money. And I can say this as a matter of fact because I've been in this scenario before with plenty of trades when I was still kind of learning the ropes of trading when I didn't have a trade plan established. Now, emotion is not a trader's friend. How can we eliminate emotion? By having a trade plan. Again, it's the idea to follow a rules-based approach to trading. By simply having a trade plan, you're setting yourself up for success before you even place a trade. And that is absolutely critical. You want to have everything out of the way, all external variables covered before you enter the trade. Now the question is, what should you actually include in your trade plan? As I mentioned at the beginning of this video, I am including a template that you can utilize for actually creating a trade plan. It's specifically geared towards options traders, so I'm sure the options traders out there that follow this channel will find that very useful. You can utilize it for swings, for day trades, at pretty much any type of trade it'll be good for. If you're not an options trader, you can still download it. It's completely free. Kind of tweak it and tune it to exactly what you want. The two most important things that I think you need to have in a trade plan are your two risk points. Number one, where is your stop loss? And how do you establish this? Of course, it depends on you as a trader, what your goals are with the trade, what ultimately, no pun intended, but what your plan is with the trade. And we establish risk points. Let's take the example for stop loss. Where do you establish your stop loss in your trade plan? So one great way to go about doing that is to identify where you're wrong on the trade. Again, if you're in stock XYZ and you're in calls and you expect it to move up, obviously because you're in calls, at what price level are you going to determine that your analysis was incorrect and exit the trade? Are you going to follow a stop loss like that example with the price action, or are you going to follow stop loss that is more concrete based on the position itself. For example, cut your losses at 15% loss, cut your losses at 5%, 10%, whatever it is. You have to decide that as a trader, and what is going to be better for you, what's going to be better for this particular trade. Are you gonna, there's a million different variables, but this is one essential point that you have to have in your trade plan, where you're going to cut your losses. Now, every trader has losses, it's part of the game. If you're unable to stomach them, trading probably is not for you, but that's a whole other topic in and of itself. Now, the other risk point, obviously, that you want to have is where you're going to take profit. Are you going to take profit when price action reaches a certain level that you expect it to? Or are you going to take profit when the position itself reaches a certain percentage of gain? Say 30% gain, 50% gain, whatever it is that you prefer and that you expect from the trade. Now, of course, these are very vague outlines. To properly assess where you're going to take profit and where you're going to set your risk requires some skills in technical analysis and what your expectations of the price action are going to be. Now, again, having a trade plan allows us to eliminate any type of emotion from trading. That is essential. I talked about that in a previous video about why 9 out of 10 traders fail on the market. One of those reasons was because they let emotion get into their trades. Now, if you ever feel angry or upset or any kind of, emotion like that after a trade, you likely were either oversized or you weren't following your trade plan. Having a trade plan eliminates emotion, and if you are still emotional even after having a trade plan, you need to adjust your sizing. That goes into risk management, and it's a whole different topic as well. So I hope you guys found this quick video helpful on trade plans. Again, don't forget to download the template in the description box below. It will be the first link. And as always, if you got any value from this video, if you found it helpful, please like and subscribe to the channel. Helps us grow organically, gets the video to more people like you. Thanks so much, and I'll see you in the next one.